Hello, welcome to another video by Indicator Vault. In this video, I'm going to go over these two indicators, the Order Block Gen and the Harmonic Pattern Pro, in ways that you can combine these two to get into some trades and, as far as overall get the direction and look for entries on different time frames, just how these two can work as confluences together. And so I'm going to just start here on the Australian dollar, US dollar chart. Got the 3-hour chart here. And for the settings, I just have the default settings on them. And this is typically the pattern you're going to look for. And, so for instance, we've got this bullish pattern here, marked by the bullish Gartley. And right as it forms, right as the pattern completes, we see an order block form right here with these candles that complete the formation of the bullish pattern. And then what do we see here? Break of structure to the upside, breaking this high. And then what? Retracement. Let me mark the high of this order block. Retracement right back down into it. And then continues up. And, for instance, we can see how this bearish butterfly formed. We did not get in a bearish order block here. And now obviously we do get the strong down move, but only after it took the high. And so it's nice to just have the extra confluence, the extra confirmation of these working side by side to get in on a good trade and to find the high probability zones to trade from. I like to use their harmonic patterns to find the overall direction. It's going to tell me if I should look for sells or buys. And then the order blocks are going to actually refine the zones or the entry points. And so I just wanted to point this one out. We're going to go to a different chart here in a minute. But I wanted to point this just pattern out. This is just kind of the classic, the ideal scenario that we find. We find the pattern. We find the order block right here as the pattern forms. A move up, a break of structure, retracement, and then continues up. Now, there's a few different ways. Just, quickly go into some harmonic pattern stuff. If we mark this high to this low, as far as take profit levels, the most recent leg down or up, you can have the 50% mark as a good first take profit. You can also have the high, taking the high. If this pattern fully forms, we could actually see it start to move up and take out the high of the most recent leg. And then these other fib levels, 1.27, 618, and even 2 standard deviations will be great take profit levels as well, as long as it remains very bullish. Now, here we are on the Euro Japanese yen 2-hour chart. And we can see here, bearish pattern, bearish cipher indicated right here. Now, this is going to be an example I'm going over that you will pretty much have to be on your charts. But I want to show, even though we haven't seen the retracement back up into this order block yet, I'm going to show how we can also view, see the halfway point of the pattern, how a bearish order block has formed here. So, as this green candle has closed, the pattern forms here with this 7 o'clock candle. So I just want to note that at the 7 a.m. New York time, the bearish cipher has formed as it's going into the bearish order block. So this order block has not yet formed. Again, we're kind of anticipating it to retrace some up into here, and we'll look to refine our entry in a future date. But I just want to show this here. So if I can mark that 7 a.m. price, and then we'll go into a lower time frame. All right, here we are on the 15-minute now for the Euro Japanese yen chart. And if you recall, remember the 7 o'clock candle was when it formed, retraces up. So when the 9 o'clock candle starts, as you can see right here as my cursor is over it, that pattern has now completed, right? It was the 7 o'clock candle that formed it. It closed. So the next 2-hour candle is the 9 o'clock candle that starts here. Now, remember over here on the 2-hour chart was our big bearish order block. And if we look right here, see the bottom? Just above these here. Perfect touch into it. Now, I understand that the harmonic pattern has not formed yet. See, my cursor has showing 8:45, so that candle is not closed yet, so we don't have that pattern forming. After this candle closes, we have the bearish cipher that has formed. So what you could do, and if I actually take off, if I hide it, you see this candle did not retrace up. Just these. This one perfectly touches it at 8:45. This bearish order block that is inside of the 2-hour higher time frame order block comes and touch it here. So right as that bearish cipher has formed after the candle close at the 9 o'clock candle here, you can just sell short. You have that confirmation. It's hit the 2-hour bearish order block here. It's hit the 15-minute bearish order block over here. And it is now confirmed the bearish harmonic pattern. So you could sell short there. And as I get this risk reward, I have the wrong one on. All right, so now I've got the short. Let's say you sold right at the opening of this candle. By about 30 pip stop. Let's put that there. Just a few pips above that high. We're not expecting that high to be broken. And this is a conservative one. Just to create a new lower low, which we see as of right now, it just barely has. See right here, it's dipped below it. Just create that new lower low. You're looking at over a 7R, 7.3. Just selling right off of that candle. If you wanted the aggressive stop, which would be quite aggressive, given the risk to reward, for me personally, it would not be worth it to move my stop down here. Since having it above here for over a 7R just to create this new lower low, that's plenty. I'm not going to get greedy and try and tighten it. But as far as just the principles of it, the principle is that the high of the pattern should not get broken, right? That it should just fall. So if you put it above this high, this is where the high of the harmonic pattern is formed. A super tight stop of under 10 pips. But that just skyrockets your R&R to 24.34 just to create a new lower low. Now if we go back out to the 2-hour, because this is where our pattern has formed and framed, it has already taken this low, right? So you would be taking partials, but if we are expecting more bearishness and for price to continue to fall, these are some other great levels to have. Like I mentioned before, the 1.27, 1.68, which obviously would just continue to skyrocket the R and R. But again, the halfway point of this leg, great place to take profit. We can see the sensitivity to it on the downside. Obviously, it offered another push down, but the initial run through just tanked right through it. But I would take partials right here, and then maybe, wait for some retracements. That's why you want to take partials. Get some profit, and get some profit here. It very well may still continue to tank down, but not before it retraces back up into this order block. This order block has not been touched yet. So we can easily expect a retracement up into here before some more bearishness. So these are just some ways I use the order block gen and the harmonic pattern together to find some confluences. Like again, the main thing, you'll find these order blocks form right as the pattern has also formed, and they will be very sensitive to price. You can get into some great trades right in these zones. So I hope this video was helpful, and until next time, best of luck trading.